What up, everybody? Welcome to another class full of gems here at SMC. So, the first half of class, I want to talk about last week on the NASDAQ. Last week on the NASDAQ was a lot of back and forth price action, a lot of chop. I know we had a very strong start to the week. That started right out the gate between Sunday and Monday, right? But then after that, it pretty much consolidated for the remainder of the week. So I know there was a lot of people that took losses inside of consolidation. It always happens. People make money in trend and give it right back in consolidation. It happens all the time, but we're gonna pull out whatever gems we can from that price action. And then at the middle part of class, it's time to address that chart debate. Today's chart debate was very interesting, so I'm excited to see people's answers and see if they got it right. And then, of course, at the end of class, we're gonna go through the predictions, right? What do we see happening for all the markets on this upcoming week? So with that being said, let's get right into it. I got certain breakdowns I'm gonna go through. So let's start right at the top with Monday. And when you look at Monday's price action, let me zoom out a little bit. This is what the 5 minute look like headed into market open, right? This 5 minute candle is 925. So we about to open, the market's about to open. And this is what the futures chart looks like. And you can see that the movement significantly slowed up because, see, overnight, yeah, it got crazy. As you could tell, overnight it got crazy. And then we started chopping up. So, man, the last time I really got to have a live class with you guys, I went over something called engineered liquidity, and I talked about choppy movements when the market is staggering in this manner and kind of waiting for your moment. And so what I think is, I always try to think for the mind of a market maker, and I say, all right, they ran ridiculously overnight. Everybody in the world is like ultra bullish at this moment. And so what do people think as soon as the market opens? First of all, people who swung calls overnight, they about to try to take profits right away, right? Or they better, because usually if they gap up so hard, there's going to be a quick move to the downside. And guess what? It might go back up, but it really depends on the setup. Sometimes that was the top. But the point that matter is they're not going to really let people FOMO in too much. And so people who want to take calls at open, let's get them out of the market real quick. And a way to see that they're going to make that type of move to the downside is the movement that is surrounding the opening bell. So around the opening bell, when I look at movement like this, right, this type of movement, I'm like, okay, they're probably gonna make a quick move down to clean this up, and then they'll continue higher if they want to, of course. And so when I see this on a 5 minute, I already know what's coming. This is the 15 minute view, same thing. Now, I wasn't looking for these 15 minute bullish fair value gaps to send price to the upside. As you can see, even here in where was that, man? Hold up. Let's go here. Yeah, actually, it was right here. So you see, I took this exact play. This is the play that I took on that Monday morning. I took it to the downside. I wasn't really looking for this 15 minutes to work because these fair value gaps are irrelevant in context. And I understand that with this major gap below from the hourly chart, this major fair value gap below from the hourly chart that we made at 3 a.m. the previous night, right, in London, price needs to come back and address this imbalance. So when you have such a large imbalance, a lot of times we want to see if we can come back to maybe the 50% of it. That's a solid destination. Now, please don't miss details. Price does not always need to come back to the 50%. There's nuance here. So there's a lot of incorrect teaching out there that tell you price has to always come back to the 50% of a fair value gap or any imbalance. It's actually context. It actually depends on the context. In this context, if order flow had shifted bearish, we are looking for the 50% in this context. If we were still in very bullish order flow on like lower time frames, basically, at that point, I wouldn't be looking for 50% just yet of this imbalance. But there's kind of like other things I'm thinking about while I say what I say. There's layers to certain statements that I can't go through in one setting. But I'm just saying, in this case, we are looking for 50%. So we're gonna watch that move. We're gonna let that play out. I think if we would have lost that area, then we will be making a much deeper move into this gap. So the point that matters the most is, right, what price does when it gets hit. That's what's gonna tell us everything we need to know for the rest of the day. What does price do when it gets right there? But in the meanwhile, let's see if we can take that move. So this is the 1 minute chart. You can see, like I said, it was very choppy. Headed into it, price comes to the highest body of the swing point. One of the other gems that I've shared here. Looking at the highest body of the swing point is always a safe target. Highest body of the swing point, and then you watch the 15-second start to shift bearish. It really never looked back, so it's kind of hard to like really just give you much of it. Like, there's not really much to say as far as, hey, if you missed the top, you could get in here. It's really just like price just jump. Price just absolutely dump here. The only entry I could give you for this, which is also what I use to kind of like validate me getting into the play, is really about getting in from confirmation through invalidation. Right? If we were still bullish, it's very unlikely that we would have closed under this bullish fair value gap. So when I seen this get close under, at that point, I already know, oh, we're gonna run these lows, these equal lows. And if we run these, I mean, oh wow, when you look at the whole section, doesn't this look like exactly like we went over, like what we went over 2 weeks ago? This type of liquidity. So I'm like, oh, well, dang, I got a big move on my hands at this point. Price is going to continue to dump. And if it's coming under here, why would it not run these lows? Oh, shoot. And oh my gosh, when you start like really looking at it, you're like, oh, nah, price is about to, oh yeah, now we got a big move in our hands. So you can see how it might start here, but if you have a higher time frame perspective, you actually could catch very large moves. So let's see where this ends up going. We already talked about looking for price to come to this hourly bullish fair value gap. I wouldn't hold this play. Right now, it's been a straight line move. So let's talk about managing it. For me, this imbalance here will be very important. This large imbalance. So if we were to invalidate that, I would get out the play. Price rejects where right at the 50% of that 15-second bearish fair value gap, and we're looking for purple. And for me, I took profits when price hit purple. This is where I was out of my play. Like once price hit purple, I was good on that. Didn't need anything really much. Pretty sure it was purple. This is, by the way, this is 6 days ago. I'm pretty sure it was purple. I know I did want price to come to this hourly fair value gap, and I wasn't being greedy with it. And it's either I took it at purple or I took it right here. One of these was my exit. I just know that I didn't want to hold it to the 50% because I knew price could react to this. So, but either way, looking at it now in hindsight, at the end of the day, yeah, even though price wants to come to 50%, you still want to pay attention to PD raise on the way down. So like I'm not mad at a person continuing to hold this. For me, I was chilling. It was Monday. There was no news that day. I felt like price would be uneventful, and there was CPI the next day. So I didn't have high expectations. Once I made the money I wanted to make, I was out of there on this play. But yeah, price starts kind of like choppily moving down. Like it's moving down, but it's kind of choppy or whatever. I'm sure I was out to play by this moment. But let's kind of look at what happens when price gets into that 50% area. And this is on futures too. I think sometimes it's better and easier to hold things on options than futures, because if you trade futures, you guys know every tick matters. Like every tick really matters. On options, depends on your expo. You could kind of survive somewhat of deeper retracements better than futures. Futures, you're really watching like a significant amount of money like leave your position, versus options, like the same retracement just doesn't equal the same amount of money on futures that you're losing in every retracement. So sometimes in futures, you want to just lock in, you want to secure your profits. If I was trading options, I might see what price does with the lower half of this 5-minute bearish fair value gap, and see if price does want to come to 50%, just to get a little bit more out of my move. So, here we are. Price continues to drops right to the 50% area. And then you're watching price starting to make a reversal. All right, so as price makes this reversal, it makes a 5-minute bullish fair value gap. Now, why is that important? Why is that important? Because this big purple area, let me remind you, is a 1 hour bullish fair value gap. Okay. When you have a 1 hour PD rate or a 1 hour point of interest, you want to look at the 5-minute for order flow shifts. Because if on the 5-minute I notice bearish PD rays on the 5-minute getting invalidated, and we're simultaneously creating bullish ones, to me, okay, the play may be ready. So if you were to witness this and you see how we made this bullish 5-minute fair value gap, that might be something you will look into to see if price wants to use this to take you higher. You know, price can start on here for forever. I actually remember this play. We were talking about this in the phase 2 chat. And by the way, this is the second go at this recording. If you're watching this on YouTube, we actually got on here at first. I had technical difficulties, and this is us running it back. I was telling people in the last recording, like, I didn't have a chance to really go through my charts in depth how I usually do before these classes, so I'm kind of improv this. So forgive me if there's certain things I don't really remember that well because I didn't get to go through this too hard. But that's just a quick disclaimer. So yeah, I do remember, by the way, like in my phase 2 chat, we were discussing this play. We had loved the 50% reaction. We understood at this point price is gonna run these equal highs. It's clear on the 1 minute. Look at the 1 minute right quick. You see these equal highs. It's very clear price is gonna do that. And we were holding our play here as long as the 5-minute bodies respected this bullish fair value gap. And let's be very specific. No, my fault. I already said it. Yeah, bodies. I already said that. The bodies. We want to see 5-minute bodies respect this 5-minute bullish fair value gap. But let's remind you, why do we like this 5-minute bullish fair value gap? Because not only are we simultaneously invalidating a bearish one, right? That's a good thing. But we're also making a bullish one. So at that point, this bullish one needs to work. And stop losses are based on this working. So if 5-minute bodies didn't respect this, I would get out the trade. My stop loss is not at the swing low. My stop loss is at a body closure under this area. All right, just so y'all clear. And I'm not mad if you put your stop under the swing low. I know a lot of people do that. To me, I think it's just an unnecessary loss because it's very simple. It's like if this play is ready right now, it will hold this. If it's not ready, it will not hold that. It's an if-then statement based on that. When you do surgery on this 5-minute bullish fair value gap, you'll also notice that price is respecting this 1-minute bullish fair value gap right here. So if I zoom in, you'll see there is a 1-minute bullish fair value gap, the very light purple area that you see price comes into. Objectives will be met on all time frame. And so now we want to watch. This is a lot of consolidation. It's very tough. You just gotta, like, at this point. Let me show you how I take this trade actually, without even saying it in theory. Let's show you for like, so if you didn't get in down here and you didn't get in on the very first fair value gap or even the second one, and you're waiting for a retracement for entry, your first retracement occurred right in this area. Let me circle it. This is your very first retracement after the order flow shift. So if you're a person that needs a retracement to get in, that's okay. Let's look at this. So you want price to retrace into this 5-minute bullish fair value gap. What I tend to do in these situations, I try to look for inside of the 5-minute bullish fair value gap, right? I want to see if once we touch that area, and by the way, y'all, really quick, I'm going to delete the hourly area. I think we all see that price came to about the 50%, which is what we want to see. It's considered balanced now. We can move on. The market doesn't have to go any lower than that if we're going to be bullish today. So I'm going to delete this. I think everybody sees we reacted at the 50%. I'm going to delete that so it's not as noisy. Okay, so this purple area is a 5-minute. I'm going to write B, FVG. Actually, B can stand for bearish. All right, I might as well. Bullish. All right, it's a bullish fair value guy. Right. So to remind everybody on the same page. Now let's get it. Price taps into the area. What I like to see after we come to that POI is I want to see the 30-second make a 30-second bullish fair value gap. And I'll try one entry like that. So let's see if we got that. Ever since we touched it, haven't got a 30-second bullish fair value gap. Nothing so far. Boom, we got one right here. All right. So based on this reaction so far, I don't necessarily trust this one, right? So if price look like this, I don't necessarily trust this one. I more so want to see price begin to really leave the consolidation with a level of energy. Now, if this fair value gap would have occurred, like right here around this area, then I might have been more interested. Like, okay, hey, V-shaped reversal. But based on what occurred where we tried to pop out of it and came all the way back down, came up, came back down again, I already could tell we're consolidating. So off the rip, people, I don't I don't trust I don't trust fair value gaps on the inside of consolidation. So I'm gonna be real, I wouldn't even take that fair value gap based on seeing what price is already doing. I need to see price leave the consolidation, then I'm gonna trust it. All right, but whatever. Let's say you did try your trade out right here on that fair value gap with a stop loss below. If price would have come back down and then stopped you out, at that point, to me, that's my first attempt at an entry. The next time I'm gonna enter is I'm gonna try to enter towards the bottom of the range. And then, and by the way, if I don't get that bottom of the range entry, then guess what I have to do? I have to wait for an entry above consolidation once again. So I'm gonna repeat that so you guys understand the three things I'm looking at. First thing I'm looking at is a fair value gap out of the PD array. A fair value gap coming out of the PD array on a confirmation time frame. It's a 5-minute PD array. In other words, it's a 5-minute fair value gap. So I like to look at the 30-second to make bullish fair value gaps coming out of that area. The 30-second has not made one yet. And so there's no entry for me here on my first choice of an entry. No entry. Price comes back down, comes back up, comes back down. Okay, we're going to consolidate right here. So for me, I don't trust this fair value gap, but whatever. Whatever. If you tried it and lost, cool. Your next opportunity at an entry is at the bottom of a range because you're bullish. You understand that? So I will wait for the bottom of the range because you're bullish instead of getting in at the top of the range. And when price comes down here, you're nervous every time, hoping it goes back up. Right? So I would rather enter down here and let it play around, because if it really starts to come down and comes to here, your stop loss is close. You know, I'm gonna put S for stop loss. Your stop loss is close at least versus getting in up top with a stop loss way below. Because I always try to look at where am I invalidated? I'm invalidated once price closes under the purple. So I want to have a stop loss as close to that as, I mean, my fault. I want to have an entry. I want to have an entry as close to that as possible. Okay, so if I notice that we're in a range, but I'm bullish for real, I'm bullish out of that range, I try to get in at the bottom of the range. All right, so that's my second choice. I want to get in somewhere at the bottom. And let's say I did that. Let's say I got in like right here. Then I'm just setting my stop under the fair value gap and I'm living with whatever happened. I'm setting it appropriately. I'm counting points like, okay, this entry is maybe 766. Okay, 746, about a 20-point stop loss. Cool. What am I cool with? And maybe take 3 micros. I might take 5 micros. Do the math on it, and I'm like, okay, I'm cool losing so-and-so amount of dollars. And then I'll just size it and I'll let it play out. Price will consolidate forever, and then eventually, magically, it chooses the direction you thought it was gonna go anyways. Now, if you said right here, oh, I got stopped out, I'm gonna wait for the bottom of the range. And price just stays right here and it never goes to the bottom. I wouldn't say FOMO in. Personally, I don't FOMO in. I say it's cool. I know I wanted to get in lower. It's all right. I'm going to still take the guaranteed play. They're going to have to prove to me that they bullish. So when we leave the consolidation, I want to see us leave the consolidation with a form of energy, some type of fair value gaps. Then I'll get in based on those. And my stop loss is going to be based on the respecting of the fair value gaps around the consolidation break. Now, there's a lot of gems of what I just said, so I hope y'all don't miss that. I really hope y'all don't miss that, because that's like in-depth on just like risk management and stuff. Don't fight the chop, and it's just things to look for when you want entries. A lot of people ask me for like entries advice. That's something that I would use. That's something that you guys could use right there. So it's okay to sometimes take a quick loss. Like let's say you did take this fair value gap, even though I don't like it, you might have taken it in real life. That's okay. The stop is so close. Like, bro, I don't mind you trying this out, but don't try out 10 fair value gaps in the same area. Like, bro, price is consolidating. Relax. Try one out that seemed to be probable to you. Your stop loss is, what is it, 6 points? You risking like 6 points. Let's just say 10. Let's round up and say you risk 10 points. That's all right. You lose 10 here. When you get in right here at the bottom, you'll make freaking 100. Like, it's all right. You'll be net positive by the end of the sequence. But ultimately, let's see what happens in this general area. The trading view don't play around too much. Let me just go to the 1 minute right quick and then show y'all. I'm either going to be on Trade Evade at all times or Top Step X for the question that hit the chat just now. But yeah, price ends up Price ends up holding the area, and then we ultimately start to leave the area to the upside. To no one's surprise, and we targeted these equal highs and above. Really, we really wanted above, but this was a very simple target that we look for. And what I love about, by the way, my members is I didn't even tell them that like we were trading separately. I wasn't live trading them. They were writing into the chat. I was already in the play by myself, but I'm seeing them in the chat saying the same stuff. Like, yeah, I'm looking for the equal highs and I'm looking for this and I don't want price coming back here. And I'm like, all right, bet. Like, yeah, they good. Like they solid. So shout out the members, man. But guess what? If you zoom out now, you see what did 5-minute bodies do? 5-minute bodies hold the upper half of the fair value gap, how we needed to, and then price runs these equal highs. And we look for even higher. And let's not forget, higher time frame context. We were looking at price coming to the 50% of that hourly bullish fair value gap, wherever it was. It looked like this or something. Price comes to the 50%. You now see the reaction. And at this point, we're on the way up. Order flow shifted bullish. Clearly, order flow shifted bullish, as well as you see us respecting this area. And between the hourly and the 15-minute, it was very clear that we wanted these highs up top. So for the rest of the day, I was bullish into these highs. Based on what happened at this fair value gap. So what's fire about what we do is, when you're wrong very early. So to me, it's like, if this works and we leave with, we break these equal highs, especially, it's clear to me that we're coming to these highs up top. So at that point, any retracement, I don't believe in it. Unless we start coming into some areas I really don't want to see it come back to. Like, for example, if we would have come back down to here or something like that, like, that's not a good sign. I already know I'm wrong. I could be wrong too. But right now, probabilities definitely say the next destination for the NASDAQ is this yellow line above. And so we basically stayed bullish on that. So let's look at this PM trade. What time is that? 12:40. Perfect. Let's go to this PM trade. So price comes up to, I don't know. This is from the morning, right? No, so yeah, that was from the morning. We can delete that. All right, so first and foremost, once again, you see it here again. The highest body of the swing point. You see that? The highest body of the swing point. Price comes to it. I keep telling you, it's a safe target. If you were looking for the wick, if you wanted to take profits at this wick up top, you did not get filled on your exit, and you're very frustrated right now. And so I'm not saying to always go for. Definitely be careful, y'all. Drawing on the screen. Just make sure you're not drawing on the screen. I'm gonna delete that in a second. All right, yeah. So if you're looking for the top weight, you didn't get filled. And mentees, by the way, do y'all see? Remember I'm saying in the chat. Remember I talked to you guys last class about when we would look for highest body. Hopefully you could see it right there. You see the highest body exit right there. All right, but boom. Now price shifts back down. I waited patiently like a freaking hawk on this day for this fair value gap. Like a hawk. Waiting on that. That fair value gap is extremely important for the NASDAQ to hold in order to be bullish. Now, why did I believe in this fair value gap so hard? Because we did not meet the objective, y'all. We did not meet the objective. Remember, the whole point of going to the higher time frame to get direction and looking at higher time frame point of interest, and so you got higher time frame targets, and then that guides your lower time frames. So from a higher time frame perspective, we already were looking for the hourly chart to get a visit into this hourly bullish fair value gap, and then we get 5-minute confirmation to believe in our hourly target, which is just the previous hourly highs. That's all it is the previous hourly highs. And then, like I said, low-key, the 15-minute also was very clear to me that we were going to these highs since down there. But that's a separate note. But let's just frame it based on the hourly for this demonstration. All right, so at that point, any retracement, you can't panic. You have to see retracements as opportunities. Retracements opportunities. Like, look, imagine you wanted a piece of this move. You watching the Nasdaq go crazy, like, dang, man, like I missed my entry down there, whatever. And then price starts moving backwards. Don't panic. If you know where price is going already, you should be hyped. Like, oh, it's lit. I'm about to, you know what I'm saying? About to make a bag. It's just like regular investing. You don't want a bull market all the time. You need a bear market to get better entries for your long-term positions. So let's see what price does here. We waiting for it to come into the purple. I know it was playing around at first. It's choppy, whatever. Starts moving higher, but we don't meet the objective just yet. The objective is up here. If we don't meet it, we still bullish until further notice. Now, I ain't gonna lie. Dang, I pressed way too much. My fault. I ain't gonna lie though. Oh yeah, this is an if-then statement. There's a whole if-then statement on that because I ain't a friend. If we didn't hold that, I wouldn't be bullish no more. This is extremely important. Mentees, we went over this demonstration last Monday in class. So y'all should know now why this fair value gap is the most important fair value gap right now. It all came down to that. And if it wasn't for this, then we were most likely going for those lows. So maybe I might flip bearish if the movement is smooth. For me to, if this area got invalidated, it would need to be invalidated, not in this choppy fashion though. It needs to get energetic with like fair value gaps for me to actually jump into the downside. Because if they invalidate a very probable bullish area, but then starts chopping again like this, to me, I just already know what's going to happen. We're just going to continue to chop. Like there's no direction right now. So the only how I'm getting in on the downside is if we lose it with energy. Then I'm like, okay, I'll play the downside and I'll target the liquidity down there. That's a quick side note. But anywho, 5-minute area, what we look for, 30-second, confirmation. So price comes into this area, and let's say you took this 30-second entry right here. If you took this one, and then price didn't react to it, then you took a loss. You would have taken a loss right here if you took this one. And the loss is small. We win bigger than we lose. This loss is it's a 3-point loss. I mean, 3 points. If you can't lose 3 points, what are you doing? But price ends up still using the area, sweeping the previous lows, and then it comes back up. And so let's say you take another shot at this. Then let's just see how it plays out. I mean, yeah. Like if you didn't get in after this candle, or while it's forming at least or something, I don't know what's up. You know what I mean? So like me, yeah, I was in this play. I told you guys, man, when price moves like this, it's fake movement. This is not real. Price does not move like that when it's really bearish. And so to me, when we move like that into a highly probable PD array, such as that purple area, I really believe in it. And so, yeah. So yeah, I'm riding this play, and guess what? Anybody can see at the bottom of my screen what time. Can y'all tell me in the chat what time that big candle popped out at? What time was that? The time that we really moved towards the real target today. What time was that? Do y'all see it? Thank you, Nazi. And thank you, Dale. Exactly. 10 minutes before New York closed. In other words, 3:50 p.m. Good stuff, Lady Cubs, SSK. Oh, yeah, good stuff. So, exactly. We talked about this in these free classes multiple times. It's not my favorite macro. There's a whole bunch of other macros, but it is one of the macros that I teach. Not my favorite, though, by any means. But it works, man. Like, especially when price engineers liquidity into that close, right? It does that into a PD rate, into close. This is just a clear play. So I'm in this, and then we get the pop out to the upside here. And yes, you could of course target the previous highs. I'm not mad at you. Go ahead. But I had bigger things on my mind. Pause. You know what I'm saying? I'm looking for this. We're looking for this up here. And so, boom. There we go. Target. Because I know at the end of the day, objectives have to be met on that hourly time frame. So that's why I held just a little bit longer into this. And that's why I took profits at So that was smooth. I know I outlined that one already with the mentees tip chill free class. So yeah, there you go. All right, so there you go. That's Monday right there. So I hope you guys got something out of that, especially the entries talk. I think that was important, as well as just framing your trades from a higher time frame. So when you kind of zoom out, what really transpired? What really transpired when you zoom out? We had price that day. All it did was we gapped up, left this as a open gap. We still never came back to it to this very moment. Price drops down into the 50% of this large imbalance from overnight, which makes sense that they would come back to balance that out early in the day, which also simultaneously fakes people to the downside before running higher. And there you go. All right. So hopefully learn from that one. And then I want to talk about Wednesday. Where is Wednesday? Tuesday continue to run higher in the morning and everything. And then this is where the chop started to occur in the market for the most part. But let's talk Wednesday right quick. I want to show y'all a pretty cool trade for Wednesday. What gems can we take from Wednesday's price action? So, all right. Here we go. Here we are. 9:30. Yeah. Probably showing too much about doing that. All right. So basically, my people, let's see if I could pull up ES next to this. Let's go. Let's say 8 a.m. All right, so I want y'all to peep this. Look. You see these highs? These highs are from Tuesday at 1 p.m. This was a high that was put in the market Tuesday at 1 p.m. What do you notice here? You notice that ES, which is the SP 500, they did not run Tuesday's highs, but NASDAQ clearly ran Tuesday's highs twice, actually, one and then two. So NASDAQ already ran that, ES hasn't. Whenever you see that, that's what we call an SMT divergence, and that's something you need to keep your eye on. You need to keep your eye on that. That's major. And so I was about to say about that. Oh, but I had gotten sidetracked, my fault, yeah. But okay, yeah. So the market is about to open at this point, and I'm noticing that there is an SMT. I'm gonna go to the open for both of them though. Hold on. That's 9:12. Just look at the difference. Like ES is way down here. They still haven't run it. 9:23. NASDAQ been ran it. So we start to drop at first. That's 26, 7, 8, 9. All right, bet. Okay, so what happens at first? This is 9:29 a.m. on both tickers. Let's go to 9:30 and see what transpires. 9:30, boom, we flash it upside. Now, what do you notice, people? What did you guys just notice about NASDAQ and ES at open? What y'all notice at open? If you're learning anything. They both shot up, yes, but give me more specifics. What just happened that's significant? So far, Cartier says ES took the highs, NASDAQ hasn't taken the highs, but that's still developing. So yes, that's something to keep your eye on. But Tiff said it, SMT, where do you notice that SMT? And Shania agree with what Cartier said. But where do you notice the SMT though? At the lows, exactly, Brock. Exactly. So all right, so I see it. Now y'all catching up in the chat. Good job, y'all. So notice this, people. Notice how the NASDAQ swept the lows. And what did ES do with those very same lows? Left it open. That's interesting. That's actually extremely interesting to me. So now at that point, I'm like, all right, ES, you're now showing us a very bullish setup. And so if I notice that ES fails to run these highs again, we could be looking at a pretty nice drop. Because right now I need ES to continue this bullish movement as well as NASDAQ, of course, but there's an SMT at the lows right now. And if you notice this, and that's why I do have this on my monitor whenever I trade, if you notice this, you could play the upside. Now I traded this live with the team. When we did this live, I didn't trade the upside here. I only traded the downside because yes, there's gonna be downside. I watched this play out, understanding exactly what's going on, but I watched it play out because I was waiting for this move, which we'll see in a second. But if you wanted to play this off the SMT, there's nothing wrong with that. You could get in if you see this is a 1 minute play. So your entry could have been based on the 15-second. So if you notice it's at open and you see ES already ran those highs at this point, that makes this imbalance extremely high probability. Michael said it's getting choppy again. Can y'all hear me? Can y'all hear me properly? Okay. You hear good. All right, perfect. Thank y'all for the confirmation. All right, smooth. So let's say, you would have gotten in at the opening candle. Opening candle is very, I appreciate y'all in the chat. The opening candle is very risky. Do not get me wrong. But I'm just saying, this is coming off of an SMT. And if you're just weighing bull and bear cases, there is no way that ES should have invalidated this fair value gap if we were truly bearish, and definitely shouldn't have invalidated this fair value gap right there if we were truly bearish. So my point is, ES is not only giving you an SMT type of bullish setup here, but it's simultaneously invalidating bearish PD rays. So I know the opening candle is dangerous, but to me, this is one of those opening candles that's going to have a continuation for the reasons listed. I hope I'm not losing nobody right now. And so you get in and you base your stop loss on the fair value gap that's created. And what would you target? You would target these highs. If you have a question, definitely ask me in the chat and I'll try to answer it if I could. But I'll be trying to move through these demonstrations. But if I don't answer it here, I'll 100% answer it after class. So just remind me. But definitely write it regardless. But all right, so let's get it. So price runs these highs as we would expect it to, and look at what ES did. Mentees, do you see painting here? Mentees, I hope y'all see painting here on this 15-second. Facts. All right, but anyways, so I'm talking about for ES, and so so we pushed high probability fair value gaps on both tickers, worked out. We pushed to the upside. Nasdaq looks even more bullish than ES does at this point. That's something to keep your eye on, isn't it? All right, what does Nasdaq do? Look what Nasdaq did, y'all. Let's not get it twisted. Nasdaq just ran the pre-market highs. Ah, man. Nasdaq is so bullish right now. Like, Nasdaq is so bullish right now. It's not even funny. But ES is just slow. Like, bro, ES has not even ran the initial highs we were talking about before. Nasdaq ran these highs like 5 times at this point already. ES is just so slow. That's something to keep your eye on. Don't just look at that and be like, no, it means something. Like, it's telling, like, the price is telling you something. So what I said to everybody on the stream at the time is, I said, if we come back, I think it was on the 15-second. Once again, I'm sorry, y'all. I didn't get to fully go through these charts yet, but I believe it was based on this fair value gap. I'm like, yo, if ES keeps holding this SMT and we invalidate this bullish fair value gap, I'm going short. Like, I'm going short. And so what happens? We starting to chop around. Let me get ES on the same page. Remember, we still want to see ES run this yellow line. Can ES touch the yellow line is the big question. There is no reason in the world for ES to, in this context right now, invalidate this fair value gap in this context. So if you want confirmation from invalidation on ES, I feel like you should be safe in your play if this gets invalidated. For Nasdaq, I felt safe on my play if this got invalidated. I was on Nasdaq for that live trade, but I'm just saying, let's see what transpires here. All right, so this is where I went short. Let's be very specific. I went short on this one. So when I saw us lose it, I was like, yeah, I'm going short. I went short here. And for me, my stop loss is just at the highs at the time. It's just at the highs at that time. And so let's let it all play up. All right. So first of all, I feel very secure in my play now because I just know that if we were truly bullish, this would have worked. Simultaneously, look what ES did. ES came down and invalidated their area, as well as they're holding the SMT. So between the SMT, the confirmations through invalidation, I feel very safe, and I'm targeting what? Well, for me, I was targeting, hold on. Yes, first of all, I remember this. These equal lows, very clear target, very clear target. I'm not interested in this fair value gap for real. It has probability if we're bullish. How you know if we're bullish? You get that from the higher time frame. To me, because it's a higher time frame SMT, I don't believe in this 1 minute bullish fair value gap. Instead, I actually believe in this 1 minute bearish inversion from my more seasoned SMC people in here. I believe in the inversion more than I believe in the BISI right now. You understand? And so to me, I understand this BISI could take you to the inversion, but the inversion is what I really believe is going to work. So at this point, if anything, I can even move my stop slightly above the inversion. But whatever. So yeah, what else was I saying? So yeah, because you get your direction from a higher time frame, it'll let you know which PD rates to pay attention to, because at this point I'm not concerned with this, even though it's unmitigated, right? Price never touched this fair value gap before, and you watch a 50% reaction, so you're like, oh, maybe this is significant. And I'm not saying be sleep at the wheel. Even on the live trade, I said, yo, I'm being careful because this fair value gap does have a level of probability to it, but I believed in the higher time frame direction because of the higher time frame SMT. All right. How much do previous day highs play in when you take trades? It depends on the trade. I might take a trade based on that. So it really depends on the setup I'm looking for. But all right, so we'll watch this continue to play here. And so yeah, you see the inversion won that battle. And then at this point, this is a pretty simple play into these equal lows. This fair value gap has probability right here. It should take us there, the one that we just hit. That should take us there. And so we were still in the play. We held it. This was an 100-point live trade. 99. It was 99. Let's be specific. It was 99, but whatever. It was 100 point. But anyways, and then at this point, we were holding runners to see if price can respect this fair value gap. I think, like I said, sorry guys, I didn't get to go over this. So it's on the video and everything that I have, but we record those lives, but I'm pretty sure it was that when we were trying to see price respect. If price didn't respect that, then we get out the trade. Why is that? Because that is the last valid bearish PD rate. So why is the exit based on this? Because guess what? You had London lows below here. We were like, that's actually my real target. That's where I really wanted price to go to on this day, but I don't hope and hold. So if there's anything you take from me, please don't hope and hold your plays and don't be stubborn. Like, I really, really wanted London lows this day. I was like, yo, I know we up 100 points, but I think we got another freaking, 70 points in us right now. I really wanted more for the runners. But if this didn't hold, to me, it's not going there. Because if it was going there, this would have worked. Simply put, this is the most important fair value gap for bears right now. I don't care about this one up top. I don't want that one up top, nothing. It needed to be this. So when you learn real order flow, you'll know which ones to pay attention to. And it's actually working at first. Cool. Then price finds way to the upside. We take profits. We're done. When we flash back to the upside, we took profits. We were done. And then I said, everybody, I think we're going to chop right here. I knew we were going to chop right here because I already know that bears at this point lost the most probable bearish order flow. And I understand that bullish people been lost their bullish order flow. So at this point, I just know that we're going to consolidate. So everybody... Oh, well, I'm not gonna say everybody. A lot of people around the world were trading this right here and got killed in this chop that's about to ensue. But we literally knew it was gonna chop since right here. So we stayed fully cashed, ended the live and everything. Stayed fully cashed. Let's actually just let me do this because it's moving kind of slow. But like, let's just kind of like watch this develop. Oh, I know why. It's because ES is attached. Hold on. There we go. All right. So come on, man. Come on, Trading View. I don't know why it's not going. I don't know why he's acting like that. That's mad weird. Not on a 10-minute. All right, let's just go here. Where's we at? What is this? Wednesday? Move down here. I think it was this. Yeah, this is what we were just doing, right? It was right here. So look, people, look at this disgustingness that happened. This nastiness. We just avoided this, bro. Like, I don't want no parts of this. I don't want to trade price action that looks like that. Ever. Ever. All right, so yeah, we stay cash. This is the whole AM session. The whole rest of the AM session was tried. And so there's no need to tilt and stuff like that. It's nasty work. Stay out of that. All right, and then just one more slight demonstration here. I'm gonna show. That's a Wednesday, by the way. That's the Wednesday breakdown. And then let's go to like Thursday right quick. I think Thursday I had a red day. Was it Thursday or Friday? One of them I had a red day. Oh, that's Sunday. I'm tweaking. I already passed it. Says that Thursday I'll be with Eva. Yeah, I get it. Thursday was a little annoying. Hold on. I wanted to show one more thing on Thursday. Hold on, y'all. Where's Thursday at, bro? I wanted to show you guys this on ES2 low key. Let's go to ES for a second. Yeah, I remember wanting to show this. So just really quickly on ES, just saying, like, you have a very high probability 4-hour bullish fair value gap here, right here. A very high probability. And I keep telling you, if you chop into your PD array, you got a strong level of probability it's going to work. So look how we chopped into the area. At that point, you're just waiting for order flow to shift over, which you witness here. Even if you took the very first of all, I told you guys, hourly PD array, I like 5-minute bullish fair value gaps. So we never got a 5-minute bullish fair value gap at any point here. Plus, I really wanted a 50% touch. Sorry, I should have showed you guys that. Let me just show you really quick. Me and my mentees, like with the mentees, I go over like the most probable places on fair value gap. And in this specific example, we were looking for price to react around the 50%. So even if there was a fair value gap that came out right here, I wouldn't believe in it really, because I knew at this point price's objective was to come here. All right, so knowing where on your fair value gap will help you, because I think sometimes people hear me say like, hey, 4-hour bullish fair value gap, and like, you know, they're like, yo, Rel, where do you want to like take the play from? Am I getting it right here with a stop loss down here? Like, that's a huge stop loss. And I'm like, no, it's just, you just need like a bit of a deeper understanding, because you wouldn't look for the reaction up here. You're actually looking for it around here. And if it doesn't happen around here, it's actually starting to lose probability in this context. I told you I don't always want a 50% reaction, but in this specific context, which is something I went over with the mentees who are in the room, they should know now why we wanted 50% in this specific example. And so when price comes here, and then I start seeing price flip bullish, and you see a bullish fair value gap right here. And by the way, this is hindsight because this is 5:20 a.m. I was definitely asleep, but I'm showing us for learning purposes. I did not take this trade, but for learning purposes, that right there, if you watch that develop, you could get into play with a stop loss based on price respecting that. If you really want, you can have a stop loss at the swing low. But to me, I like to do it based on the fair value gap. So you could have a stop loss literally 3 points wide. And if it's a 4-hour PD array, like, I don't want y'all to ever think I'm just saying that for, like, bro, think about it. It's a 4-hour PD array. So I'm targeting 4-hour highs. So I'm risking 3 points to make like 100 or something like that. So yeah, that type of risk to reward is possible if you know what you're looking for. Because to me, I believe this is the bottom. Like, every week I'm coming out and I'm predicting the market, right? So I'm not perfect, but I'm saying a lot of times I can strongly predict the market. And so I say that to say, if I think that this is the bottom, there's a reason to it. I'm not just guessing. Like, this is supposed to be the bottom, because if we're in bullish order flow, this is the area that price is supposed to V-shape. That is where the V-shape is supposed to happen. And so it's not crazy to say you literally could risk 3 points and target 4-hour highs. Like, no, that's a real thing. Real talk. And so let's say you missed that first fair value gap. You have a very large imbalance that came out here at 8:30, and then you could pop out right there. And Cartier, you're right. My apologies, Cartier, for the mistake. 4 hour 4 hour PD rate, we should really be looking at the 15 for confirmation. You're absolutely right. So let's look at the 15 for that confirmation. For your 15 didn't make any bullish fair value gaps here. So for me in this regard, I would have to get in through confirmation through invalidation. So here is the 15-minute entry, and you see the inversion as well. You see how price respected it as an inversion as well. So there's always like multiple things we could pull out our bag, but I appreciate you checking me on that, because I was making a mistake just now. I was picturing it as an hourly fair value gap, but this is a 4 hour fair value gap. So I like to use the 15-minute for confirmation for that. So Cartier is absolutely correct. So let's say we did use a 15-minute here. You could have this 15-minute bearish fair value gap is extremely important, because if it's not this, what else is going to stop us from flipping to bullish order flow? Like this, there's basically no bearish fair value gaps. It's an extremely disgusting, choppy drop that we made our very first one right here. So if we're going to retrace into it, yeah, we would expect to respect it if you're bearish. And if we don't, guess what? You're probably bullish. Could use it on the other side, whatever. So yeah, confirmation through invalidation is just another strategy we have, and that will work out. And you watch how price goes. Now, how do you take that type of play? If you're gonna get in based on price using this as what we call an inversion, when price comes into that area, I would do the same things I normally do. I'm gonna get in based on, if it's a 15-minute area, I want to get in based on the 1 minute. So you can get in if you see 1 minute confirmation in here, you could try it. You could have your stop at the swing low if you want to. I'm giving you guys options. I don't want you to just be like a mirror of me. Like, one way you could get in is watching for a 1 minute bullish fair value gap. If you want to have your stop based on that, cool, you got stopped out. If your stop is based on a swing low, you never got stopped out. To me, I wouldn't base it on this, because the overall PD array is only 4 points wide. So there's no need to do this type of entry. I can risk 4 points. Like, to me, if I'm getting in based on this as an inversion, I'm just gonna have like a 5-point stop or something. Like, it's okay. I'm just gonna risk 5 points. Like, whatever happens, happens. I just know if we're bullish, we're supposed to respect this area. If we're bullish, we should respect this. It's really that simple. And so yeah, that's how I would take this trade from a 15-minute perspective. I just want you guys to know why I came down to the 1 minute. So quickly, let me back up in case somebody got lost. In case you got lost, let's back up for a second. 4 hour bullish fair value gap, you're looking for a reaction right there. On a 15-minute chart, that's going to let you know if your 4 hour play is correct. And so on the 15-minute, we like to see bullish fair value gaps come out of that area, or /in bearish fair value gaps not working out. The only bearish fair value gap that we even had in this very trash drop was right here. Perfect. I love that. So there's a whole entire if-then statement that comes off of that. All right, so it didn't work. And now we look at this area as an area that price shouldn't come back under. And so since I'm focused on this 15-minute area, making that a 15-minute PD array, I'm coming down to the 1 minute, and I'm using that as my entry strategy. In this case, because the 15-minute area is so small, I don't necessarily need to do a 1 minute entry strategy. I could just kind of get in and size it for like a 5-point stop, which is nothing. So this one worked out in that regard, but that's why I came down to the 1 minute, because I pair up a 15-minute PD array with a 1 minute entry. I pair up a 15-minute PD array with a 1 minute entry, people. All right. So that's that. And then obviously, ES did make his way to those 4 hour previous highs. Easy money right there. And yeah, for time purposes, I might leave it right there. The other demonstrations I have, I might leave those alone. All right. So, but yeah, I hope, even for the things we talked about so far, I hope you guys was able to get value out of it. I really do. But let's get into the chart debate and then price prediction and stuff like that. All right. Y'all still with me? Facts, Fib. I hope so. Like, that's what I'm wondering. I hope y'all still with me. I hope y'all still with me, man. Copy. Copy. I feed off y'all energy, man. I feed off y'all energy. I need that. But love y'all. Love y'all. Let's get it. Let's work. So, my people, guess what? It's chart debate time. Let's really talk about it. Let's really talk about it. So I literally have not checked the chart debate since I posted it. Yeah, I'm telling you, I've been everywhere and back today. All right. And that's what's up. I'm glad to hear. So let's see what the free community is saying. Now, this chart debate is a little crazy. So if you're watching this on YouTube, just pause your screen. This is the monthly view. This is the weekly view zoomed in. I zoomed in on the weekly hit. This is the daily view. And then you have the question. Is arrow 1 going to play out, arrow 2, or arrow 3? That is the chart debate this week. So once again, if you watch this on YouTube, just pause your video, get your answer, and then let's see what happens. All right, so what is it looking like right now? Arrow 1 is the least, has the least amount of people in the free community choosing that. I see arrow 3 has, what is arrow 3 again? Okay, arrow 3 has the most, and then arrow 2 has the second most. All right, so basically the free community is looking for price to sweep this, sweep these highs, tap into this fair value gap, and then drop off. That is what they think is gonna happen the most. Let's see what the mentees think. And once again, this is a new mentee group, so I haven't really taught them necessarily how you could know the real answer to this. They know something that's key to it, but I think that they need actually tomorrow's lesson. Mentees, tomorrow's lesson would have helped you answer this even more, even better. So I don't know if they answered yet, but I'm just giving my disclaimers. I haven't taught them I haven't taught them yet. All right, so they overwhelmingly are looking at arrow 1 as the correct answer here. And what is arrow 2 the second highest? Yeah, so they look at arrow 1 as the answer. Now, here's what I'll say to that. I don't know if you, so the question in the chat, like tomorrow's lesson that's a mentee asking me. Tomorrow's lesson is what I was trying to do on Thursday, before Thursday's trouble. So before Thursday's technical difficulties. So yeah, I'm doing that tomorrow. But yeah, so what was I saying, man? Arrow 1. Oh yeah, my bad, guys, my bad. I remember. I lost my train of thought. Okay, the 2 most likely answers I'm gonna say right now is arrow 1 and 2. Arrow 3 is the least likely answer. I'm gonna be real. It's so unlikely for price to sweep these highs and continue down, y'all. If price were to come to these highs, it's running these highs. And if we're bearish, we need to be bearish from right here. Like, I'm not gonna front. It's one of these 2 answers, and I'm honestly not so mad at arrow 1 as a choice, but arrow 2 is the answer, y'all. I'm gonna be real. Arrow 2 is the answer. Here's the, I know I didn't even do my commercial break today. That's because I had a late start today from the technical difficulties. But yeah, arrow 1. I meant to say, I wrote arrow 1 wins. I wrote it wrong. Arrow 2 wins. My fault, y'all. Arrow 2 wins, not arrow 1. I wrote the wrong thing. I can't even post this now. I gotta change this. Arrow 2 won, everybody. Arrow 2. Okay, arrow 2. We rejected right in this little painting, fair value gap right there. All right, and I'll break that down for the mentees tomorrow. Arrow 2 won that one. All right, arrow 2. So yeah, that looks like, so both groups lost that one, but it's all good. It's all good. I'm tripping y'all up. So let's talk about what's gonna happen in the upcoming week in the market. Let's go to the economic calendar and see what's on the schedule. So this week, y'all, ain't nothing really going on. It's a very lackluster week as far as economic news goes. Fed speakers on Monday, Fed speakers on Tuesday, Wednesday. Bro, this week is pretty whack. I'm not gonna front. There's nothing going on. So I'm hoping we don't get another consolidation week, but it has some likelihood for consolidation. So just be careful this week. PMI is a decent news event, but it's nothing like, it's not a market mover for real. I just seen this for the first time. Sunday, Jerome Powell is doing a commencement address on Sunday afternoon. I don't know what that's about, but either way, that's after we'll talk about that next Sunday. Like, we'll talk about that next Sunday. So yeah, that's what's going on. So let's kind of take it back to the charts and see what's up. All right. Yeah, jokey. All right. So, oh yeah, Cartier said it's the week before Memorial Day too. True. Yes, man. Holiday weekend, man. Be careful, my people. So let's go to DXY. We're gonna start with Forex side, and then we're gonna move from there. All right. So on DXY, y'all, on DXY, I told you guys I have a whole if-then statement based on this weekly bearish for value gap. So they had a really tricky week last week. I actually was trading Forex on Euro USD, and I took some losses on it trying to trade in here inside of this consolidation. They caught me up in the chop, I'm not gonna lie. Because once we came back above the weekly bearish fair value gap, obviously, all right, let me say that sentence first. I have so much in my brain sometimes, my brain is moving faster than my words. Like, all right. So guys, what I'm trying to say is we moved past this weekly bearish fair value gap on a 4-hour chart. And so I'm like, oh, we're probably just gonna continue running higher. I was like, this weekly bearish fair value gap didn't work, therefore I'm bullish on this ticker. And then price came back down and it consolidated. So that tripped me up. And the thing that's tough about it is I need weekly bodies to hold the area. So yes, on Monday, we watched price come all the way up here, but look where we closed. Right back inside of the weekly bearish fair value gap. And so I can't say I'm bullish on it until price closes above it. I just can't. Now it's showing bad signs because of how high we went above this weekly bearish fair value gap. But yeah, there's still some likelihood. There's still some likelihood we could drop off. And if we drop off, then of course I would target the previous lows. Something that a bear might like is the movement. The movement is disgusting. We just been chopping our way up. That doesn't look like real movement to me. So it can still drop. We're still holding the area, but we're gonna watch it. I do feel like if we run last week's highs though, I feel like we'll get a continuation. So, maybe even have price alerts above Monday's highs will be a good thing to do. But ultimately, at least Forex in just a tricky spot. I ain't gonna lie. Like, let's look at some other Forex tickets with that being said. So Euro JPY, I had marked these off because I was looking for price to I'm looking for price to run these lows, especially the first set of lows. Looks like yeah, I mean, it's a little choppy right now on the hourly chart, but I do feel like it's gonna run those lows, and I wouldn't want to see it invalidate this 4-hour bearish fair value gap. If this gets invalidated to me, I would abandon that play. All right, but Forex has been pretty trash. I agree, Cartier. It's been pretty trash, and like I said, they caught me last week in that chop. Euro USD. I mean, this is what it looked like from the Euro USD perspective. I told you guys I got caught up in the chop, which was looking for it to move higher. It looked so good at the beginning of the week for this thing to move. My fault. I wanted to move lower. So at the beginning of the week, it looked like it was definitely headed that way. Then we came back up. Didn't continue. Like, it didn't even run the buy side. It freaking just chopped. Forex had nothing for us last week. A whole lot of nonsense. But I have no different sentiment on Forex than I had really the past few weeks. The past few weeks, I said that, my bad. I have all these things on the screen. My bad, y'all. The past few weeks on Forex, I've been saying I'm bullish on it as long as we hold this bullish fair value gap. I'm bearish on it if we close under it. So that's for Euro, holding that bullish fair value gap right there. I'm still looking for British pound to hold this bullish fair value gap as well. They actually held it a lot cleaner than the Euro did. This is a very clean reaction right here. This looks a lot better than Euro. But, I'm looking for them to hold that weekly bullish one. Who else? Let's look at New Zealand dollar. I wanted this one. Oh yeah, I was bullish. Yeah, my fault. I'm just trying to remember, guys. I'm bullish as long as we hold this one as well. It's still holding it. There's literally like nothing different than I've said before. We're still waiting. Forex did nothing last week. We're still waiting. This ticker here, USD CAD. I've been saying that my my bearishness is based on this blue area, this bearish value from the daily chart. You can see that here on the time frame is what time frame I got that green from? Yeah, the 4 hour. The 4 hour was able to hold that bullish fair value gap that we talked about. We talked about price holding this for higher, and it held it for higher, but we didn't do anything after that. Price just stayed there. We actually consolidated between those two PD arrays. It'd be like that. So like I said, there's nothing different about Forex than what I've said before. For this ticker, I'm bearish as long as bodies hold this weekly bearish fair value gap. You see what I'm saying? Like there's just nothing has happened in Forex for me to change my song. So there you go. Now let's go to crypto right quick. This was last week's analysis on crypto. I wanted to see price come into this bullish fair value gap and then take it to all-time highs. And yeah, I mean, you see what's going on today. This big green candle is today's candle. Bitcoin opens back up, I believe, at 7 p.m. So this last green candle you see it started at 7 p.m. or 8 p.m. One of them. I think 8 p.m. I think 8 p.m. Eastern. 8 p.m. Eastern. So yeah, yo, Bitcoin just started this candle. So you can see Bitcoin's been super bullish right now. Now it probably won't come back down, but if it does, and you go to the weekly chart, I would just want it to respect the weekly bullish fair value. So I would shorten this and draw it like that, right? I would want it to respect the weekly bullish fair value. That's all. I don't think it's gonna come back down though. I think we're just on our way to all-time highs right now, the way it looks. But regardless, the Bitcoin play is playing out. So hopefully people are doing what they need to do with that. And then let's move on to futures. Looks like NASDAQ is starting to push down a little bit. So let's really talk about what I see here on the NAS, man. All right. So I'm waiting to talk about NASDAQ. All right, so let's kind of zoom out and see. This ended up being the bottom. So we were correct about that when we called this in December. Even though I doubted my own analysis, it looks like it was ultra correct. And we pushed all the way up and we were targeting, hold on, B adjust should be on your chart. From my chart, I had B adjust on at the bottom right. B adjust is on at the bottom right of trading view. And so there was a bullish order block right there. In December, I had said I'm looking for price to react to the upper half of that, to be the bottom of the bear market. So yeah, so bear market didn't even start yet. And I called the bear market and I said this will be the bottom of the bear market when it happens. And it was the bottom of the bear market when it happened. We can now say that in past tense. I love it. I love it. And something that as an easy target to the upside, my fault. Somebody in the chat said, how did I doubt my analysis? The reason I doubted my analysis at the time that we got there. So when we got there, I was bullish on this day, and I wanted to see continuation. Then we came back down the next day. But I definitely, even on live, we played a live trade. This was a fire live trade. We played the upside. This is good. And then the next day was down. And the next day popped up. So at this point, I'm like, yo, I think this really is going to be the bottom for real. Like, this is my PD array. But out of a weekly, right? Weekly bullish PD array, right? What time frame do we pair up with that for confirmation? I like to pair the 4 hour up with that for confirmation. Okay, so here's why I started to doubt myself. In case anybody was wondering why I doubted myself, I paired up the 4 hour my weekly. So first and foremost, I don't want to see 4 hour bullish PD rays like this 4 hour bullish fair value gap get invalidated. But I understand that sometimes we consolidate first before we push out. So my first thing I didn't like was watching this get invalidated. So that made me think, maybe this isn't going to be the bottom like I thought. Like I said, day one was fire. This is the 4 hour chart, y'all. This is the 4 hour chart. So day one was fire. I'm like, oh yeah, we called the bottom. It's lit. And then next thing you know, Tuesday, you see Tuesday was a big red day. So I'm like, maybe not. Then we pop out of here on Wednesday. You feel me? On Wednesday, we popped out of there. And it looked great. It looked great on Wednesday. And for me, I was bullish on this as long as price respected the upper half of this bullish fair value gap. Because it traditionally, probability-wise, keyword is probability-wise. Nothing is 100%. Probability-wise, if we're bullish, 4 hour bodies will hold this 4 hour PD array, the 50% of it, excuse me. So once 4 hour bodies closed, under the 50%. I'm gonna say they got once 4-hour bodies closed under the 50%. I said, man, it was probably a false alarm. We probably not really bullish for real. And so I was like, dang, we might be bearish. So now I'm thinking bearishly around here. But I said we're only bearish if we respect this. Now everything comes to this, because if we're truly bearish, guess what? This needs to work. So now this doesn't work either. So you can imagine me going back and forth with my analysis. Now I'm like, bro, I was bullish, now it's bearish, and then they didn't do that. So now I'm bullish again. And it's like, all right, yo, this whole area, I'm gonna chill on. Like we're consolidating right now. So I started kind of like chilling on long-term analysis in here. I was like, let me just kind of like chill and let the market like show me what it really is gonna do out of this PD array. You know? And so it consolidated, yes, but it ended up pushing out, and it was chopping, and then we pushed again, and then it kind of brings us towards these time periods. Of course, I mean, I've been bullish on it for a while now, but it was down here. It was this section where I doubted it, to where like if I didn't doubt myself, I would have freaking swung my life savings to the upside, of course. But it was hard to do swings with the choppy start, with the back and forth type start. So that's why I say I doubted my analysis, as opposed to people who've been following me for a while knows that I called the top of the bull market as well. I called that 7 months early. Up here, I swung puts. Yeah, I made bread on the downside for real, because I didn't doubt my analysis, and they didn't give me mixed signals. Like when I said this was the top of the NASDAQ and the top of SPY, both, it was right. I really was the tippy top. So I was able to swing puts, and we was lit on the downside. So I executed so well when I called the top, but I didn't execute too well when I called the bottom. So, it'll be like that. Because remember, like, even though I believe this is the bottom, don't ever get it twisted, y'all. I could be wrong too. So I'm not like arrogant to it's like, no, I can't be wrong. If I said that's the bottom, it's gonna be the bottom. Like, nah, like we could have bounced and price could have came right back down. I'd be like, dang, yeah, I thought that was the bottom. Never mind. You feel me? Like, I could be wrong too. I'm not wrong often, but I be wrong as well. I'm a human being, and I did not make the algorithm that we trade. I did not create this. I just learned it really freaking well. That's all. So, but I don't know everything about the algo. I always tell people that. Like, I don't know every little detail about it. No one does besides whoever created the stuff. All right. So anyway, but yeah, good question. I hope like people can like even learn from that alone. Just like, it happens to anybody. But on the upside, a very safe and easy destination that we targeted, even last week during my live trades, was this weekly bearish fair value gap. Price gets there, and then it's been consolidating ever since, right? So I'm looking for like somewhat of a reaction here. I'm waiting for order flow to turn over, and so I see that, what you call it? My fault. I seen that we gap down. Price filled the gap, and we starting to drop back off as we speak. That's actually doesn't look too shabby. I ain't gonna lie. Actually pretty solid. I like this. I actually usually use this green candle as a PD array in this specific context. So, I'm teaching y'all instead of making money. But, and this is a free class too. I don't get nothing from this, y'all. Nothing. But it's cool. It's cool. But I ain't gonna lie, like this, I usually use that as a PD array. Phase 2 at least should know why. But this is definitely playing the heck out to the downside. And so what comes next on the NAS? What comes next on the NAS? All right, so y'all see how we already used this hourly bullish fair value gap right there, and it made a higher high. Now price didn't have enough energy to keep going higher. It's starting to come back down. This hourly bullish fair value gap low key has a lower probability now. The next place I would look for a price to go to is, I would draw this 4-hour one, and I would look for price to go to the lower half of this 4-hour, maybe around the 50%, anywhere between like 50% to lower half of this 4-hour bullish fair value gap. Right there is the next place that I'm interested in seeing price bounce from. Do I think it'll bounce? It depends how we get there. It depends how we get there, whether I think it'll bounce. If this area does not work though, so I have if-then statements based on this. If this area does not work, then I think we're going to address this gap from last week. I don't really see the NASDAQ invalidating these red candles. down here on the 4-hour time frame. I don't really see that. And I do trade the continuous contract for the question in the chat. Yep. You could trade right on this. But yeah, so I don't really see the NASDAQ invalidating this area. If we move to the downside, I think we're gonna either bounce right here, like I said, or we're gonna end up bouncing somewhere in this general area. I don't see us coming down under that though. I'm gonna be real. There's also a level of probability of us bouncing before we get to the gap somewhere in this region. So a lot of that stuff to me depends on how we're getting there, one, as well as I'm always gonna take things with confirmation no matter what. So like, let's say we do come to this area down here. I'm not just getting it because we in there. I'm gonna want to see order flow shift back to the upside. And all the entry strategies that we talked about in the demonstrations today, that's what I'll be using to believe in price moving back higher. And I think once we run these highs, especially, I think we're going straight to all-time highs after that. So of course, y'all, like playing retracements is tough. We could literally bounce tonight and go straight to all-time highs. I try to give plays on these watch lists for retracements as best as I could. Like, what areas do we not want to see it go to? What areas do we want to see it respect and everything? Right now, I would like to see it. If we drop, I would prefer to see it drop into this general area, 4-hour bullish fair value gap right there, and I want to see this work first. If I'm not getting confirmations out of that and it loses this area and it starts to trade back down, then I'm looking for it to come into the gap from last week. The gap up from Sunday, between Sunday and Monday, my fault, Friday to Sunday. Yeah, the gap between Friday to Sunday, that's why I would look for price to go under that area I mentioned. All right, so that's the plan for NASDAQ. All right, hopefully that's clear. If we just keep pushing up, we just keep pushing up, man, and then we have to find new PD arrays for retracements. Right now, we're going down so far, so I'm teaching this based on what I'm expecting out of continued downward movement. And if I had to say, I think we continue if we run the lows. So you see the lows we put in when we gap down today so far? If we run these lows, I do believe we're going to continue to the downside. I'm going to be real. I think we're going to run them, and I think if we run them, we will continue. I think we'll continue to run these lows down here and even further. If you want an easy PT, I would say there is an hourly bullish value gap right there that starts at 21,115. I think anything I think downside, an easy destination will be that. But I do believe it goes lower than that, of course, as I already outlined on this class. So yeah, man, we'll be watching those areas. Let's go to ES. ES, what did I draw here? Yeah, I think for ES, what was I saying? This bullish fair value gap is a very big deal for bullish people. Like, I'm looking for price to trade into this, and it really, really needs to work, especially the upper half of it. I'm gonna be real. It really needs to work. It low key. Never mind. I need to say that tomorrow to my mentees. All I'll say though is that I'm not so hot on this area. I'm not so hot on it, but I will want to see the upper half of it work if we're gonna use it. If we don't use it, the whole area period, if we don't use it, then I will look for ES to come into. I ain't gonna front. Man, this is like bolder state. It's like a bold statement. We're so strong that it's not safe to be calling like big retracements necessarily, but I don't really see much stopping us from coming into last week's gap up. So like I would still kind of target that. Like if it's not this area on ES, then I low-key see ES coming down to last week's gap before it goes back to all-time highs. All right. Is that due to the weekly SIBI retracement NQ? Oh, I think the weekly SIBI is gonna cause a baby retracement on NQ. So the question in the chat is wondering like, hey, like, are you like looking for a potential retracement based on that? Like, yeah, I think there's just gonna be a reaction to this, not a reversal from a weekly perspective, but a reaction from a weekly perspective before we continue higher, because I do believe the next destination for the NASDAQ is all-time highs. So I think anything to the downside is just simply an opportunity. All right, so yeah. And then uh I hate when price moves while I'm teaching. It really annoys me. Like, why do you do it when I'm teaching? Like, cause I'm watching on my monitor. Like, I would have 1,000% been taking this to the downside right now. But it's cool, man. I must really love y'all or something. All right, so what I was gonna say is this hourly bullish fair value gap. I really needed to see Dow Jones use this for me to be bullish on the Dow. This is an extremely important bullish fair value gap on the Dow, and that being the reason why is if you kind of look at the 4-hour chart, we're trying to move past these higher highs. This hourly bullish fair value gap was it was very crucial for a bullish person. So not using that is kind of whispering secrets to you, right? You're probably not that bullish. All right. When I look at the 4-hour chart, I will look at two more areas. The next area I would look at after this is I would look at this bullish fair value gap on the 4, and then I would look at this 4-hour gap from below. So the two areas I look at to take the Dow Jones back to the upside, either that one or this one. I would use my entry strategies on confirmations to take those trades if I was looking at the Dow. We almost done. I'm now turning B adjust off. I am now turning B adjust off. I am on the Russell now. For the Russell, I'm looking. This area is very crucial for bulls. There's a daily gap in the VI right here. This area is crucial for bulls to hold. I want to see bulls hold this area. I do feel like they have the ability to. I would want to see this take price back to the upside on the Russell. So you can see what I highlighted here. You could watch that area, and I would like to see the hourly react to it bullishly. If we keep trading through it, this thing has some potential to make a pretty significant drop. I might just at this point I would just target these lows right here just for safety, but it has potential to keep moving even lower than that. So if then statements are based on this gap, of course, once again, if we just keep moving up, we just keep moving up. I'm giving on the watch. I only see you guys once a week for the free people, so I'm trying to give y'all things to look at as the week goes on. If we were to retrace, now CL, I said last week on the watch list, I'm looking for CL to make a move to the upside. We made that move to the upside, then we retraced. This bullish fair value gap is everything for CL. Whatever CL does here I think it's going to use it first of all. Like if you ask me, I think I think this is the play on CL. I think this is going to take us to these highs. But if it doesn't, then I would target these lows, like the lowest low down here. So I have a whole if then statement based on this bullish fair value gap right here in the middle. This is major for CL right there. So I'll watch that one on the daily. Bullish out of that, target these highs. To be honest, I would target this fair value gap up here. I would target this one, not just these highs. I would take it up here. And I truly low-key believe that we're going to end up running these highs because this fair value that I circled is out of context. So it's a safe target maybe for a day trade, but I do feel like CL is not going to like do this. I don't necessarily see that. I think if we come up here, we're going to run these highs. But that's a side note. So yeah, we'll watch what price does there. Once again, if not this, then the lows. Everything's based on that. We got a reaction so far out of the hourly, but it's been choppy. So I would let it like kind of get some energy to the upside. And gold, man, gold. All right, so gold, I believe, is going back for all-time highs now. I originally swung gold to the upside, and then I cut my trade. I'm gonna show you guys how. So I got in gold somewhere around here, I think, and then I took it to the upside. I was in swings. I wanted it to run these highs right away. That's why you see a price alert there. When price came back in and it invalidated this 4-hour bullish fair value gap to me. Once it invalidated that, I cut my trade because I said it's now too risky to hold. I understand that price could sometimes do a very unlikely retracement like the one it did before going higher. And so what I told myself is I could just get back in if it goes my way. But I'm always going to protect capital. So for me, I protected capital because in very bullish delivery, this should have happened in very bullish delivery. Instead, it comes all the way down here before running higher, as you see right now. Cool. And so I am bullish if we could run these highs. I think it's going to continue all the way through all-time highs. I think it will continue all the way through there. And so I would get back into my swings as long as we can maintain this right now. This is something that I've been talking about for weeks now. For weeks now, I've been telling you guys I've been looking to go bullish on gold right here. All right, it's an if-then statement on this area. If we didn't hold this area, I would become bearish on gold. So it's all about this. So remember when I was talking about on a day trade level where I might try out on a day trade level, guys, I might try out the first entry based on fair value gaps. And if the fair value gap doesn't work, I would cut it. And then I would try to get back in the next time if we're holding the area, of course, right? If I notice that we're about to range, if we're ranging, I'm like, okay, I still believe in this area. I'll try to get in at the bottom of the range. And then I'm holding it just based on the area itself. So I'm gonna reiterate that, right? One entry, the first entry, is based on some type of a fair value gap. Does that work? Hopefully. A lot of times it does. Sometimes it doesn't. The times when it doesn't, I will take the L on the fair value gap because it's usually a small amount of points. It's usually a small amount of points. I'm cool with that loss. I'm protecting my capital. I'll get back in towards the lower part of the PD array. Now my new stop loss is based on price respecting the PD array. So there will be 2 entries total. Okay. There should only be 2 entries max for real in that scenario. All right. And then if they never give me the fill that I wanted, let's say they invalidated my initial fair value gap, but they wicked me out by like a tick and then they keep going. Y'all know that be happening sometimes. For me, I would only take it above the range. And so I would look for gold re-entries like in this area or something. And that entry is based on PD arrays above the range. Okay. Just watching it. I'm just watching NASDAQ go on my monitor, y'all. My fault. About to wrap this up in a second. I'm nothing to say on HG. I'm actually done. I'm actually no, to be honest. So it's the same things with like QQQ and SPIDO that I sit on NASDAQ. It's really nothing to say. By the way, on NASDAQ right now, they about to run the lows. ES is falling short of running those lows so far. So I will keep my eye on that in case you get caught up in the SMT. If you are playing downside, just be careful. NASDAQ has a lot more energy to the downside right now than ES does. At this exact moment, of course, they both could just flash down. But you know, that target hit on NAS. QQQ Inspire the same thing as NASDAQ. I'm gonna just go back here and then I'm gonna end the stream on this note. So remember we were looking at this is what I was looking at, right? So this PD rate just delivered new lows. So at least it should do that any second now. Basically, these are the lows that we put in on the gap down. We had gap down, ran lower first, then we ran higher. So it might put in those lows. Don't marry destination, marry delivery. Of course, make sure we're holding PD arrays in this area if you're taking it lower. But yeah, let's see if we can get that retracement on the NASDAQ. That would be lovely. I hope that we can get a retracement because don't fall in love with the downside. In my opinion, I think that we're gonna run all-time highs. So I wouldn't fall in love with downside. I think anything to the downside is just opportunities, right? They're just opportunities. So if it comes down here, my bad. If it comes down here, last thing I'm saying is if it comes down here, people, this might be where it reverses, and then next thing you know, all-time highs are next. So don't forget, right? Don't get caught up. Don't try to get caught up. Chasing downside. Follow what the higher time frame is telling you. The higher time frame is screaming at you actually right now. It's like screaming at you. I will be very careful showing this thing. All right. So with that being said, my people, if you watching this on YouTube, subscribe to the video, like the video, join the free community, all that good stuff. Join the live trading. All those links are in the description box. And keep God first in your life. That's the most important thing I said all class. With that being said, is all she wrote.